SoFi CEO Anthony Noto was just interviewed on CNBC, and they talked about a myriad of topics, but the way Anthony Noto answered one of the questions genuinely has the ability to change the way SoFi is valued forever. Every time I watch an interview with him, I'm always impressed by how sharp he is and how laser focused he is on turning SoFi into one of the financial giants of the future. I'm excited to get into this video, but first, if you're new here, welcome. If you're not subscribed already, go ahead and click that subscribe button. We have passed over 8,000 subscribers. Help us get to that short-term goal of hitting 10,000 subscribers. If you want to hear about SoFi and any other stock I'm buying, selling, or holding, or any research work I'm doing, consider checking out the Patreon with a link in the description or the pinned comment down there. All right, let's jump into this video. So the first part of the interview, they're talking about some innovations specifically on the SoFi Invest side of the platform. Check it out.
CEO of SoFi, Anthony Noto. Anthony, thanks so much for joining us here today in Sun Valley. Your stock has been absolutely on a tear and got a pop from the news that you're expanding to private markets investing. Stock was up 7% on this. How big of an opportunity is this for SoFi?
We think it's a large opportunity. It's part of our overall strategy to be a one-stop shop for all your financial services needs. Investing is one of those areas, and we're giving access to Main Street investors to products they would not otherwise get in prior history. So we started with single stocks, launched fractional shares, added ETFs, robo accounts. We then started doing IPOs. We were the exclusive retail provider of the Rivian IPO, as an example. And then about a year ago, we launched alternative assets, including private equity, private credit, private real estate, and then even an opportunity to invest in some private companies, specifically through SPVs like Anthropic as well as SpaceX. And this is an evolution of now being able to invest in private companies through funds. And you can invest with as little as $10. The minimums are all different, but on one of them it's $10, one is about $500, and one is about $2,500.
So what Anthony Noto was doing there in that answer was addressing one of the major criticisms of SoFi over the past 2 years or so, and it's that SoFi doesn't innovate fast enough, they don't roll out enough new products, and he's saying that that is absolutely false by giving you the facts. SoFi Invest gives members the ability to not only buy individual stocks and ETFs, but also they've got private credit available. They've got private real estate available. They've got private equity available. And they recently expanded that offering, giving investors access to even more private equity funds where they can gain exposure to SpaceX and Anthropic and Canva and so many more private companies that otherwise they would not have access to. All of these things fit into the category of the capital light fee-based revenue that SoFi has been focusing so much on over the past 12 to 18 months. This is what has been making the financial services growth absolutely ridiculous, up over 100% year over year. That non-interest income growth, which is the fee-based revenue that adds no risk to the balance sheet at all, has been even more ridiculous. In Q1 of 2025, that fee-based revenue was up 321% year over year. In Q4 of 2024, it was also up a crazy percentage, up 220% year over year. So that's the main growth engine right now, and they're not slowing down. They're trying to expand that. Every product innovation they've come out with recently is going to fit in that non-interest income category. And that's going to continue to allow them to have that exploding growth in the financial services segment. He's letting investors know they're not just a lending company. When you fast forward a few quarters, you're going to be able to take financial services and tech platform together. That's going to be the majority of the revenue that SoFi brings in. Also, you take financial services and tech platform together, that's going to be the high majority of the profit the company brings in as well. And that is what's going to be the main thing that changes how SoFi is valued forever. Let's watch Anthony Noto get into it here first before we talk about the significance of this.
What's seen as another potential tailwind for SoFi is the idea that the new Trump bill could cap federal borrowing for college and grad school, which could drive more business to SoFi. What are you expecting in terms of growth because of that?
There will be a large opportunity for us to continue to leverage student loans, and the new bill will provide a bigger opportunity for us. But it's a much smaller piece of our business now. More than 50% of our business is from non-lending revenue streams. We've really kind of de-risked the balance sheet and tried to become more capital light. We've had 13 consecutive quarters of greater than the rule of 40, which is your revenue growth plus your EBITDA margin. And someone pointed that out to me. And our guidance for the second quarter will actually be the 14th consecutive quarter if we achieve it. and we have great momentum in the business. So while we're excited about the student loan opportunity, it's small relative to everything else that we're doing. That's driving the growth of our business and the Rule of 40 success.
So not only is he hinting that Q2 is going to be very strong, with him saying that there's great momentum in the business. That's a great thing for the CEO to say. So we can expect another beat and raise quarter. The odds are very high that they're going to beat on revenue, that they're going to beat on EPS, that they're going to beat on EBITDA, and they're going to raise their guidance. This is SoFi's formula, and it's what we've come to expect from SoFi each and every quarter as SoFi shareholders. But that's not even the most important part of what he said there. The most important part was he's talking about the Rule of 40 score. They've had 13 consecutive quarters in a row above the Rule of 40. And assuming they have a great Q2, which he's basically hinting that they will, then that'll be 14 consecutive quarters above 40 on the Rule of 40 score. So what is the Rule of 40 score and how is it used, and what type of businesses do we use that metric for? Check it out. The Rule of 40 is a financial metric that's primarily used to value SaaS companies, which are software as a service companies. And the way you get this Rule of 40 is you take the revenue growth rate plus the EBITDA profit margin. When you add up those two things, if you're above 40, this is considered to be a healthy financial business in the SaaS space. So Anthony Noto using this metric and saying that less than half of their revenue is from lending at this point, and it's just going to shrink and shrink over the quarters because financial services and tech platform are becoming greater percentages of the revenue, not because lending is weak, but because tech platform and specifically financial services are growing at a much faster clip and they're becoming a higher percentage of the revenue. So he's saying to investors, don't value us as a lender, don't value us as a bank, value us as a tech company. Tech, and specifically software, trades at much higher multiples than banks do. Banks trade at some of the lowest multiples in the entire market. So if SoFi over time is valued as a bank, we're going to see a lot less upside than if SoFi over time is valued as a tech stock or as a software stock. Anthony Noto understands this, and he's playing Wall Street's games, and he's creating the narrative that, hey, SoFi should be valued as a tech company. We are an innovator. We are a disruptor. We are a tech-forward company. We should not be valued as a bank. The ceiling for SoFi's market cap and enterprise value is so much higher if the market agrees that they should be valued as a tech company rather than if the market agrees that they should be valued as a bank. And speaking of tech, inside this interview, he also talks about how they're using AI inside of the business. Check it out here.
And you're really deploying AI across your suite of products.
We're using it in every area. So customer service, automating dispute resolutions, filing suspicious activity reports, but also personalization. We're testing a product right now called Cash App, or Cash Coach, which allows you to look at your cash across all your different partners, and we can help you optimize what to do with that cash. First of all, we'll show you how much cash you actually have and how little you're earning on it and ways to actually optimize it, drive a better return. Our goal is to help you spend less than you make and invest the rest. And that's what you need to reach your American dream.
So right there, he's talking about how they're using AI to help in every part of the business, not just the things you don't see, like the customer service and the dispute resolutions and all the extremely important things that aren't fun to talk about on a conference call, but also they're using it in very exciting things like their new product that they're testing called the Cash Coach. That is definitely just one of many that they're going to roll out over the next few years. And the narrative is going to shift around SoFi that, okay, they're just a lender, they're just a student loan lender. That was a few years back. It's like any student loan news, SoFi would move massive because so much of their revenue was coming from student loan origination, student loan refinances, but they've diversified the business in such an amazing way, and specifically in a tech-forward way, that the stock barely even moves on student loan news anymore, but rather these tech innovations, that's what's been moving the stock price higher. Of course, the strengthening fundamentals, the accelerating revenue growth, the absolutely ridiculous financial services growth, the profitability growth, all the great things, of course, about SoFi. Yes, that's helping move the stock too, but sentiment in the short term is extremely positive around the tech focus for SoFi. Let me know in the comments below if you own SoFi shares and whether or not you believe the company should be valued as a tech stock or as a bank. I'm looking forward to reading those. Definitely one of my favorite parts of posting here on YouTube is having some conversation with you guys down there. I appreciate you being here in a major way. Thank you so much. Have a great night.